continued moderation in all measures of inflation, as well as sustained stability in the Naira exchange rate, and urged the bank to sustain the stability to avoid a mission drift. In particular, committee welcomed narrowing of the exchange rate premium between the BDC segment and the investors and exporters window of the foreign exchange market. Overall, the committee noted that the recovery of the economy was strengthening in view of the return to growth of the services sector. As the fiscal sector continues to settle its outstanding liabilities, it reduces its domestic debt profile, thus increasing the liquidity of the banking system. However, the Monetary Policy Committee observed increasing monetization of oil proceeds as evident in the growing FAC distribution relative to the 2017 levels of disbursements. Committee urged the government to initiate strong stabilization programs and to freeze the growth in its aggregate expenditure and FAC distributions in order to create savings badly needed to stabilize the economy against future oil price-related shocks. Notwithstanding the general improvement in macroeconomic conditions, committee noted the rather slow pace of moderation of food inflation. It also took note of the potential risks of a pass-through from rising global inflation to domestic prices. Members, however, expressed confidence that the tight stance of monetary policy would continue to complement other policies of government in addressing some of the structural issues underlying the stickiness of food prices. The committee noted that at 14%, the policy rate was tight enough to rein in current inflationary pressures. The committee therefore reaffirmed its commitment to price stability conducive to sustainable and inclusive growth. The committee noted with satisfaction the gradual implementation of the Economic Recovery and Growth Plan in an effort to stimulate economic recovery. In the same vein, the committee urged quick passage of the 2018 Appropriation Bill by the National Assembly so as to keep fiscal policy on track and deliver the urgently needed reliefs in terms of employment and growth for its citizenry. The relatively strong balance sheets of the deposit money banks and the stable outlook. This is in spite of the concentration of non-performing loans in a few sectors, which the committee observed was satisfactorily being addressed by adequate mechanisms established by the bank to address the phenomenon. The committee also noted that as government pays off its huge contractor debts, a sizable portion of these non-performing loans will be addressed. The committee urged the bank to strengthen its supervisory oversight and early warning systems to promptly identify, monitor compliance with extant prudential regulations, sustain macroprudential policy, and manage emerging vulnerabilities in the banking system. The committee reiterated the bank's commitment to delivery of low-interest credit as evidenced in its bold steps to adopt unconventional monetary policy to aid credit flow to vulnerable and growth-enhancing sectors of the Nigerian economy. The committee therefore enjoined the bank to continue to support and encourage credit delivery at single-digit interest rate through mechanisms in the interim, while encouraging the banking system to establish frameworks to increase credit delivery to the employment-generating sectors of the economy. In consideration of available data and evolving macroeconomic indicators, the Monetary Policy Committee is committed to revisiting its decision in the short to medium term as the fundamentals evolve.